Our guest today is as good as gold, ladies and gentlemen, here to talk about precious metals investing. Welcome the editor of the Gold Newsletter, our good friend Brien Lundin. Hey, Brien.
Hey, Robert. Great to be with you.
It's always great to spend time with you, and I know you've been a busy guy because the gold and silver markets have been something this year. We've seen a substantial increase for lots of reasons that I'm sure you're going to share with us.
Yeah, lots of reasons, but the primary one, this gold bull market is about a year and a half old now, and it's unique in the history of gold bull markets. Now, keep in mind that before 1971, gold was money. Actually, before 1974 in the U.S., gold was money. And at that point in 1974, thanks to the founder of my organization, by the way, gold was legalized for American citizens to own. At that point, it became really an investable asset. So the history of gold as money is some 4,000 years old, but its history as something you can invest in is much less. It's really only a little over 50 years old. So in that history, that relatively short history, there have been about 3 gold bull markets. Now we have a fourth, and this one is like nothing we've seen before because it's been driven not by investors or speculators buying gold to try to make money off of it. It's been driven by central banks around the world buying gold to gain some level of protection or insurance or hedging against the dollar, against the weaponization of the dollar. Not coincidentally, this bull market really began when central banks started to buy gold hand over fist after the U.S. and its allies imposed really those harsh sanctions against Russia after their invasion of Ukraine. So even our allies at that point said, that's a very powerful weapon. Maybe at some point in the future that could be pointed at us as well. So we're just going to start putting some gold into our central bank reserves, our national reserves. Right now, gold is the second largest component of central bank reserves. It recently passed up the euro, and it's actually gaining on the dollar, which is falling as a percentage of international reserves. So they have been buying it, which has really driven the price up significantly. The interesting part about this, and what really makes it exciting, is that mining stocks in silver have lagged behind because the central banks don't buy mining stocks, they don't buy silver. So they've lagged behind, and they represent extraordinary values right now. And as we speak, have only now just begun to really respond and move higher.
What is fascinating that every time you look at a gold bear market, which tends to be for a longer period of time, that it is for different reasons. And when you look at the price, that's what people look at. What is the price of gold? Well, the price of gold is different in different currencies because, of course, currencies exchange against one another. And price is interesting, but what's more interesting is who the buyer is. So a lot of times in the past, there's been, we won't call it a run, but an excitement towards the metals. And we see the price go up a little bit, and you see that affected in the physical markets. Dealers have a harder time getting particular inventory. The wait times are longer. The premiums are a little higher. But that's not what's causing it this time. It's the central banks. And there's lots of central banks. In the United States, we have the Federal Reserve. People are familiar with that. But there are central banks all over the world. And when one does something, like make a decision that we better get some gold in our coffers, the rest have followed suit.
Yeah, and they don't buy like investors. They have a program where they buy every month. Regardless, They spend the money. They don't care about the price. They don't respond like investors where they get excited and drive the price up, or investors get scared and they sell and the price goes down. So you don't get those rhythms and cycles in the market like you typically do. Because the central banks have been driving this gold bull market, we haven't had price corrections like we typically have. Instead of correcting and falling a bit, then regathering and advancing again, the gold price has merely kind of paused its rise and traded sideways for a while, then taken another leap higher. So it's been very interesting, and it's been very profitable for people who are invested in the metals or in gold. But again, if you're trying to look for a way to leverage this move, silver and the mining stocks are really the place to be because they will move. The mining stocks almost have to because the mining companies are making so much money at these gold prices. So it's a real opportunity right now because they still remain very undervalued relative to their long-term averages and relative to the price of gold.
Now, the reason people invest in the metals is multifaceted as well. You mentioned people that want to buy it and sell it, at a difference. And certainly people speculate on all kinds of stuff. They watch the charts. They may or may not take physical possession, and then they want to sell at a higher price. And gold naturally kind of helps you preserve your purchasing power as inflation happens. So that's certainly a way that people can keep a liquid asset. It's very, very liquid. You can get rid of a ounce of silver or gold pretty quickly if you have to. There's always a market for it. There's always a bid. It's priced in lots of different currencies. You can pivot from your home currency to something else. But at the same time, there is the insurance aspect of it, which is putting it away for that rainy day that hopefully never comes. I'm happy to say publicly that I've never sold an ounce of silver or an ounce of gold. I've only bought them. And when I buy an ounce of gold, I buy it because I want to preserve its purchasing power today. I think the first time I bought an ounce of gold, it was maybe $900 and something. And that was a lot to part with $900 to get a shiny piece of metal. That same piece of metal today is worth over $3,000. If I had kept the 900 paper dollars, it would be worth $900. So almost by accident, if you will, if you'll just occasionally buy some gold or silver when you have a windfall or live below your means and have some excess capital, not enough to buy real estate, but, to buy some coins, then lo and behold, when inflation does what it does, the metals do what they do. But there are folks who have other angles and opportunities. And you mentioned silver. So let's talk about that first. Silver is different in that silver is not just a monetary metal, but it has industrial use. But silver is also heavier, less expensive, a great way to start your investment because, let's face it, to even get 1 ounce of gold today takes a few of those paper currency units. But silver's not like that, and yet we have seen it start to move. So let's talk about, from an investor's perspective, maybe how you decide how much gold to have, how much silver to have, and what the reason is for each.
Yeah, I recommend that everyone gets involved in this sector, have positions in both metals. And really, as far as how much in each, it depends on your taste and your needs and what you think the future lies, where the future lies. Now, silver is, as you mentioned, bulkier than gold. It for the same dollar amount, you're going to have to figure out how to store silver. And that's a practical consideration when you get into silver. But every time there's been a bull market in gold, a long-standing bull market in gold, silver has leveraged that. It's outperformed gold. It's a natural lever to gold. And so you get more of a response as silver outperforms gold. Also, if you are someone who also wants to hedge against a real financial catastrophe and an Armageddon, as it were, economic Armageddon, where you may have to actually barter gold or silver for, everyday items and food and to get through life in general, then you want to have some silver and you want to have it in fairly small denominations. If you give somebody an ounce of gold for a loaf of bread, they're not likely to give you change. So you want to be able to get as close as possible, something that's more readily divisible. And that's where silver comes in as well. So you mentioned that silver has an industrial component to it. And really, I have long held the belief that that's irrelevant for silver because most of its value is monetary in nature. If it was valued only as an industrial metal, the price would be much, much less. That said, though, the industrial applications for silver, particularly in solar energy, are growing so much, and the demand for it as an industrial metal is growing so steeply that within about 5 years, all of the newly mined silver will have to go toward industrial demand. So at that point, I think it's really going to start having an impact on silver, because if the silver is not there, then the demand has nowhere else to go and the price has to go up. So there's already a silver supply deficit annually in the market. And as we see the monetary or investment demand increase along with industrial demand, I think that supply squeeze really gets exacerbated, and we could get some really explosive price moves to the upside.
And if you haven't followed the metals, you should be aware that gold keeps bouncing off its high. It's up near the top of where it's been priced, and silver has not yet hit its previous high. So just in terms of how technical analysis might work, I know folks are thinking silver does have that slingshot effect, and we're still early in that. But let's talk about one of the areas that you specialize in, Brien. Actually, before we do that, let's do this. So before we talk about the mining stocks, because that's an area that you spend a lot of time in, let's quickly cover the other metals. Palladium and platinum. I can remember not that long ago, they always seemed to be near the gold price. And today that's not true. Is there any reason to pay attention to those metals?
Yeah, historically, platinum and palladium were grouped as precious metals, and that gave them somewhat of a monetary cachet, but they've never really been used as money like gold and silver have in history. And I think whatever attachment to the monetary metals that they may have had historically, I think that's largely evaporated. I think they are highly valued industrial metals today. So I don't, lump them in with gold and silver. On the monetary aspect, I will recognize, though, that they each have special and unique and really compelling supply-demand characteristics that argue for higher prices. The key to platinum and palladium is that demand is strong. It's fairly consistent. A large part of the demand comes from automobiles, from catalytic converters, and that's not going away. In fact, it's actually growing. But the key to platinum and palladium is supply. The supply typically comes from South Africa and Russia, the big PGM, platinum group metal producing areas of the world. And therefore, the certainty of supply is always somewhat up in the air. So the supply-demand crunch for platinum and palladium comes from the supply side of the spectrum. And frankly, that's not going to get solved anytime soon. So they are good long-term investments, but they are not monetary metals, and you're not buying them for those macroeconomic reasons.
As a real estate investor, I'm always interested in lots of different types of investment. And more than a dozen years ago, I found my way to the New Orleans Investment Conference, the conference that you've been putting on for all these years. And I thought I would learn a lot about gold and silver. And I did. But what really surprised me is your exhibit hall area, where I met geologists and miners and all kinds of folks who are in the various stages of getting the metals out of the ground and into our hands. And that's an area that you specialize in Gold Newsletter, which are the mining stocks. Companies that are in the business of mining the metals, as well as companies that are exploring for where there may or may not be metal, companies that are producers that know that there's metals there. Then you have the mints, the people that actually do the work. You have royalty companies. So there's a whole world of investing that isn't just about holding beautiful coins in your hand. Talk about that, and especially how you see that today.
Yeah, Robert, it can get confusing for someone who's not familiar with the area, but there's an advantage in that, because if you learn about the sector, you can dramatically outperform other people who aren't willing to educate themselves in the sector. But simply put, if you have a company that's going in the ground and taking out gold and silver, that's its product. Its costs for getting that product are fairly steady. They vary with inflation, but they're fairly constant. So if the price of that product rises significantly, like gold and silver are doing as we speak, then their profits can soar. So they are offer that natural leverage to the metals prices. And that's anywhere you get in the producers. You have small producers, you have large major producers out there. And you can invest in those stocks through various indices in the market. But if you're willing to do a little work and you go a little further down the food chain, you get the companies that have found something and they are developing it or trying to sell it to a big producer. And you have the companies that are out exploring, trying to find a big deposit. Those are where you can get truly explosive returns, but with commensurately higher risk. Again, though, it's an inefficient sector, so you can go in there, outwork other people, subscribe to the best newsletters, go to the conferences, talk to people, look at the people that are running the company, look at the CEOs in the eye and talk to them. You can do that work and you can find real values that the market has temporarily left behind. And you can find companies that are really well positioned to make a big discovery where you can get really extraordinary returns in a very quick period of time if they actually make a big discovery. So it's an exciting area, but you do need to do your research because there is higher risk involved for those potentially higher returns. Again, that's what we specialize in Gold Newsletter. Been at it for only about 5 decades, actually about 5.5 decades at this point. So we know all of the big players in the industry. We tend to get a good idea of the best positioned companies, the new companies that are coming out by the great management teams in the sector, the new deals that nobody's seen yet. So we have had a very good track record in this sector. And again, when you have a bull market that is shaping up to be one of the biggest and best that we've ever seen, it really mitigates the risk to a great extent.
You know, you mentioned how silver tends to lag gold when it comes to price, and then it catches up and usually exceeds. Well, there's the same lag when it comes to the mining stocks. You pointed out companies that have more gold in the ground than the valuation, and that's kind of a rare thing. But a reason that happens is it's not like the mainstream stocks that everyone owns and invests in and all the mutual funds have. There are some funds that are specific to mining shares, but again, the whole market isn't that big, and you can get a lot closer to the information. That first conference and every conference that I've been to of yours since, I have an opportunity to walk around the exhibit hall and meet the actual people who are in the business. I remember the first time I came, there was a guy that had a core sample, and I'm looking and he's explaining, and I have no idea, right? And he was so kind. He took time. He explained what it was, and I got a real understanding in that first conference. And before we're done, we'll talk about this year's conference, because you're at it again. The 51st annual New Orleans Investment Conference is coming up. But it does take a little more study. I'm glad you brought that up. So many people are like, yeah, you know, I should buy NVIDIA, or I should buy Tesla, or I should buy Apple. Okay, well, we kind of understand those companies and what they do. But the mining stocks are different because of the variety. And I know you spend a lot of your time every week talking to these companies, like actually getting on the phone, doing Zoom calls, sometimes visiting. What kind of work does it take, and how much do you need to pay attention before you pull the trigger on something?
Yeah, there's a couple ways to go at it. You know, people invest in Tesla, they invest in NVIDIA, but who knows what goes into making a Tesla run? Who knows what that NVIDIA chip actually does? So you don't need to get too granular. There are a number of ways, I hesitate to call them shortcuts, but a number of boxes you can check. You know, you can look at a management team and you can find teams that have had successes before. There are a few groups out there that have had so many successes in the industry that their reputation is worth more to them than making a little more money off another mining deal. So find those people. They've done it before. They tend to know how to find a deposit, but they also have the ability to take advantage of opportunities. You have to know what kind of deposit to look for. There are a few key factors you can look for. You need a target that's big enough to move the needle. You can get an idea of what is a good grade from the early indications or the drilling for a deposit. So there are a number of key points boxes that you can check off to narrow things down. Also, you can subscribe to some of the best newsletters out there. There's only about a half dozen that I would seriously recommend to people as well-run, well-researched newsletters by people who are in the know and know what are the best deals out there. If you subscribe to 2 or 3 of those and you find companies that are mentioned by 2 or 3 of them, it's probably a good deal and you're probably getting in fairly early. So the best way to do it is really to jump in. Start talking to people at my conference. Unsurprisingly, I think it's one of the best out there for this sort of thing. But you can go there and not only talk to the people who are actually running the companies, you can talk to the newsletter writers who are recommending companies. You can hear what they're recommending from the stage, and you can talk to fellow attendees who, frankly, I get a lot of my best tips and leads from our attendees. It's really a network effect. They're out there looking at the sector all the time, and they're very open to sharing their ideas and not just what they think is going to be good, but what they think is not going to be good, how to avoid the pitfalls. So, and it's fun. As you know, these conferences, especially ours, is a really fun event. The intellectual energy of talking to really smart people, an exotic, fascinating environment like New Orleans, it's a tremendous experience. It really is.
We're taking a little diversion from talking about real estate and talking about something else that comes out of the ground. And those are the precious metals, gold and silver. We have the editor of the Gold Newsletter with us, Brien Lundin. And Brien, coming up, it is the 51st annual New Orleans Investment Conference, or as I like to think of it, the first of the next 50 years. Last year was the 50th anniversary. Amazing, amazing conference. And it looks like, from what I've seen, this is shaping up to be just as good or maybe better.
Yeah, Robert, we really have a balancing act every year because our speaker roster is truly, truly extraordinary. All of our attendees love our speakers. They have old favorites they want to come see every year. These are the thought leaders out there that you'll see on X/Twitter, on social media, on YouTube. The people who have gathered big followings because they have valuable insights into the extraordinary times that we're going through right now. So it's a balancing act. You want to bring all of these speakers back year after year, but they can't make it year after year. So we get to turn the soil a bit and get some exciting new speakers in there as well. And we're doing that again this year. We are known for our speaker roster. We've had Margaret Thatcher, we've had Ayn Rand for her last public appearance, we've had Milton Friedman numerous times, Alan Greenspan numerous times, F.A. Hayek. I mean, the list goes on and on and on. So it's hard to match that, and I think we do these days, of people who are just really smart. We've got, if I read down the list, because there's so many, that we've got Brent Johnson, we've got Danielle DiMartino Booth, we have Dave Collum. And I urge anyone, if you don't know who these people are, go to our website, get their names, look them up. You'll be fascinated by their insights. We have George Gammon, we have Jim Arroyo, we have Matt Taibbi. I think he's the most important journalist of our generation. We have Peter Bookvar, Peter Schiff, Rick Rule, Robert Helms, of all people, will be here again, gracing us with his presence. Thank you. The list goes on and on and on, and it's being added to virtually every day. We have a lot of exciting new speakers coming this year.
Yeah, thrilled to be coming back. And what's great about it is you have all these macroeconomic speakers who talk on the big picture about what's happening with the Fed, with the economy, with the way people are thinking, consumer confidence, all of that. You'll see a ton of great charts and graphs. And many of those talks don't have much to do with gold and silver. It's more of where are we in the economy? What do we see? What about policy? And then you've got geologists, and you've got folks that spend their waking hours looking for and processing precious metals. Over in your exhibit hall, you've got real estate people, you've got oil and gas people, you have gold and silver people, you have miners. It's a fascinating way and an excellent way to get your head around this space. You'll learn something no matter where you're coming from. But if you're that real estate investor that really hasn't paid that much attention to gold and silver, maybe you have a few coins in your safe, I would definitely recommend it. It has served me well to be aware. And it's interesting, Brien, we were just at the Limitless Expo with our mutual friend Ken McElroy, and they had a few speakers in this regard, some that come to your event as well. And it was so interesting hearing some of the targets that they had for the metals. And so you always do a good job of making sure that the people that speak are going to bring actual recommendations and talk about where they see the direction of things going. But you also mentioned, I think, the greatest resource you have, and that's the attendees. Mm-hmm. You have extraordinary people. Many come year after year after year. We see the same faces. We say hello to each other. And then the real estate guys, we love to bring new people into the fold that are maybe more real estate oriented, but are open to investing in these other things. We talk about cryptocurrency at your event. We talk about, some startup companies. I mean, there's just a lot to get your head around. The event happens November 2nd through the 5th. It obviously happens in New Orleans, Louisiana, which means you're going to have some awesome food for sure, usually some incredible music, but your brain is going to get stimulated. And I think it's a chance really for people to maybe take a mental break from, apartments and houses and those kinds of things and focus on another area. There were some suggestions people made from the stage about how much of your portfolio should be in the metals. And I'll tell you about the minimum anybody said was 5 or 6%. And we had a couple of the speakers who are saying, 20, 25% wouldn't be that much of a mistake today. So I know there's no magic formula. And when I first went, I just was curious. And that's turned into a great opportunity to learn so much about the metals. I, of course, subscribe to your newsletter. And here's what I love about Gold Newsletter from a real estate investor's perspective. It's once a month, and it's a good, solid newsletter, 20, 25 pages. Brien spends the first few pages talking about where the market is in terms of the metal and why. So some of the things we talked about today. And then the last section are the individual companies that you like, that you don't like, ones that have news, ones that you would consider a buy, a hold, or a sell. And that's a fascinating part of the newsletter. I will say when I first started reading it, I didn't pay as much attention to that. Today, it's extraordinary how much you can learn about these companies just reading a newsletter once a month.
Yeah, in regard to the actual companies, that's the exciting part. The very few letters out there that focus on this area, but it is one of the most fascinating, entertaining, fun areas of investing because let's face it, it's romantic. It's the search for hidden treasure, and there are a lot of companies out there that are doing that. And it's naturally a riskier area of investing. You can mitigate those risks by doing your homework, your research, going to events like ours, subscribing to newsletters like ours, where we try to separate the wheat from the chaff. But there are potentially extraordinary gains. We closed out a position not long ago in our newsletter. One of our biggest gainers, if not the biggest ever, went up 86 times from our recommended price. Huge, life-changing returns. The average company in our portfolio right now has more than doubled in value since we recommended it. That said, there are some companies we've just recommended in our last few issues that have yet to get going. They're included in that average. So they are primed, and I think they are on the launching pad in this kind of a market environment where the metals are really soaring and the mining stocks have been lagging. I think it's just a huge opportunity. And, you made a great point, Robert, and I can't stress it enough. You've actually reawakened me a couple of years ago to this point. And that's if you want to get, it's not really if you want to get involved in precious metals, but you really should, because it is insurance, the actual physical holdings. It's insurance against something you know is going to happen. It's not like insuring your home, but you don't expect it to catch on fire. You don't expect a flood, but you insure against it. If there's one thing you're pretty confident is going to happen, is that the dollar or whatever your currency may be is going to purchase a considerably less in the years ahead than it is today. If you take some of those dollars and put them into gold and silver, history tells you that they're going to retain their purchasing power over the years to come, rather than be depreciated, as you know is going to happen with the paper, the fiat representation of that money. So it is really important to get involved in this sector. I would argue that it's vitally important for anyone who has any significant amount of wealth to look into the sector, look at ways to preserve their purchasing power, preserve their wealth, and also expand it, because we are in a bull market right now. We are in a trend that will result, I believe, in metals prices far higher than they are today, particularly in the case of silver, a multiple of where we are today. And it's not an opportunity you want to miss.
If you're a real estate investor who's intrigued, interested, wants to find out more, Brien has offered a discount to Gold Newsletter to our listeners. We appreciate that. If you'll send an email to goldnewsletter@realestateguysradio.com, goldnewsletter@realestateguysradio.com. You'll get three things. You'll get the opportunity to just buy one issue of Gold Newsletter, which you normally don't do, but you'll be able to do that so you can read it, see what you think, and so forth. If you want to subscribe, Brian's giving you a discount, and you can subscribe for a year at a 30% discount, which is awesome. It's already not very expensive, but why not have a discount? And then finally, you'll get a link to get all the details for the New Orleans Investment Conference. We'd love when you show up at the conference. One of the nights of the conference, the Real Estate Guys hold a little cocktail soiree, and you can meet other listeners. We usually have several of Brian's speakers that come by and say hello, which is a ton of fun. Get great pictures from that. And then one of the greatest parties ever is the closing party at the New Orleans Investment Conference. The food is great, the music is great, and everyone is there just having a great time. So to get all those details, just send an email to goldnewsletter@realestateguysradio.com. Brien, I'm looking forward to the 51st Annual New Orleans Investment Conference. Thanks for sharing with us today and enlightening us about the metals and the mining.
Great to be with you, Robert, as always. Thank you so much.